Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Mr. Dan Bird and I are back, and we are going to talk about Cathie Wood and her ARK Invest. And there's been a lot of hubbub on CNBC. There's been Cathie Wood paraded out saying her stocks are undervalued, misallocation of capital. People don't get it. Well, folks, 9 months ago, I warned you the strategy wasn't going to work. What we're going to do now is we're going to look inside the ARKK and what makes it up, and we're going to see, is there any value? Is there a lot of value? Is there no value? And we're going to create a portfolio with a fictitious 100 grand and see what is going on. Dan, how you doing today?
I'm doing very well. This is a very interesting topic, actually.
Yeah, I love the fact that you're willing to do the work, set this portfolio up, and really let's look inside the fund, because I think there's 30 some odd stocks inside it.
37 stocks.
37 stocks inside ARKK. So I'm going to guess with most of those stocks being down 50%, there's tons of value in there, right?
Actually, there's not.
But, no, you're kidding.
But based on my last session with you, there probably will be at some point in the next 3 to 6 months.
Which I think you're saying more pain ahead. Watch out below.
More pain ahead.
Okay. All right.
Yeah. But this is interesting because it also gives me an opportunity to talk about one of the platforms that I use, which is Vectorvest. And it didn't take much work for me to do this because Vectorvest really did all of the work. And in fact, let me share, and I'm going to show my newsletter real quick. So this is my newsletter. If anybody wants to join, just send an email to breakpointtrading@gmail.com.
Perfect.
It's free. There's no charge for it. I'll put you on the mailing list. Then I'll show you here. Hopefully, I just moved my email up there. You can see that, right?
Yep.
So this is the one that I just sent out yesterday. And Vectorvest is a platform that I use. And I actually include this every week. I show you what the Vectorvest trends look like. Right now, it's all red. This was started by a guy named Dr. DeLito. He's in his late 80s now. Started it back in the 1980s. He was an engineer by trade, so a mathematician. So all of this is based on math, the combination of technical and fundamentals, both. But he uses algorithms to determine the value of companies, to figure out whether the company is undervalued or overvalued. In this most recent newsletter, I actually took an excerpt from Vectorvest. So people that subscribe to my newsletter don't have to pay the annual fee for Vectorvest necessarily. You just have to wait for me to show it to you. But this is the one because I thought this was so interesting, and it was about Cathie Wood that I put it out there. And they said CNBC has been up in arms about Cathie Wood. Cathie Wood said bets against her fund are ridiculous and way undervalued relative to their potential. So they said, so let's put ARK constituents to the test, the Vectorvest test. Created a watch list of the 37 companies to determine whether they were over or undervalued. So Vectorvest's value was computed from forecasted earnings growth, profitability, interest, and inflation rates. Relative value is an indicator of risk and is computed from the analysis of projected price appreciation 3 years out.
Yeah, I'm going to guess that Cathie Wood stocks don't perform well on any of those metrics because they don't have earnings.
That's right. They're not going to perform well. So,
oh my God.
But it's a way that you can compare it. I mean, you do have to understand that about growth stocks. You have to understand what makes up growth stocks. Many times they don't have earnings, but the price of the stock is based on the potential for growth in the future.
Sure.
However, when you start getting into high interest rate economies, that future growth is significantly stunted by higher rates.
Debt.
So that's why a lot of those stocks are going down. So it says, what about the upside potential? It's measured by relative value. Well, the average RV of the group is 0.7. Now,
actually, the first line I want to go back and read. The average price of ARKK's holding is 93.88. While the average value is 33 bucks.
Right.
Pain ahead, folks.
That's right.
Ouch.
Exactly. So what I did was, so they said right here, and it's nice that they actually said we created a watch list of 37 companies. So that means
Yeah.
I can go in to that watch list that they've created
And just take it.
and I can then manipulate it.
All right, well, let's see what you
So
do.
that's what we're going to do. We're going to actually look at the watch list. And what I did was I took the watch list and I created a portfolio out of it,
Okay,
which is basically in Vectorvest, just a single click.
nice.
Just click on a watch list and say, create a portfolio.
Okay,
And it will automatically create an imaginary portfolio using an imaginary 100,000, and it will allocate an equal amount to each of the 37 stocks in the portfolio,
okay.
and will then allow us to track it over time.
And just so I'm clear, this would have been based on Friday's close.
This is Friday's close. That's
Okay,
right.
totally fair.
So,
all right.
so you can see right now that it's 0%.
Yeah, so that would have been Friday the 18th.
Right.
Yeah. Okay. All right. I like it. This is going to be fun. We should look at this once a week or once every
Yeah, we'll
other
look at this each week and see how it's doing. Just for fun. And this is going back to LinkedIn. On LinkedIn, I saw something from a headhunter, a recruiter,
Yep.
saying, here's a list of the technology companies that most people are asking me they're telling me they want to go work for.
Okay.
So you should buy stock in these companies.
Oh, okay.
Now this was back in October of last year.
Yeah.
All right, that's when I started this one down here called technology companies.
Hmm.
I haven't clicked on it lately, so I don't know what it's going to show.
Oh no.
But this has been running since last October.
Okay.
These are the companies that recruiters say everyone wants to go work for, and that's why that's your thesis for buying stock.
All right. Well, let's see.
All right, down 31%.
Nice work, recruiter.
Right. So you can see the purchase date here was not, and I created this portfolio.
Yeah,
based
yeah.
on the,
Oh, that's
based
awesome.
on those names that the recruiter gave me, because I was just curious to see how they do. October 8th was the origination date. You can see CrowdStrike, DocuSign,
So there's
Luminar,
is there
Cloudflare,
there's no
ServiceNow,
stock. Oh,
Okta.
one stock's up. Lumineer. No, yeah.
Yep,
Yep.
Luminar. Splunk is in there. Snowflake,
Oh, funny.
Square, Elysian, Twilio, Zscaler. So all the big technology companies that everybody's probably heard of.
That's funny.
So you can see what high interest rates do to
Yeah.
high growth technology companies that may not have earnings.
That's crazy.
This is a backdrop to Cathie Wood's portfolio.
No, and again, this is going to be very interesting. I think to me, having experienced and suffered excruciating pain in the .com crash, which people don't want to hear it, but is very similar to what is going on today. Lots of companies with great valuations. Most of them went poof out of business.
Yeah,
very, very similar to today's.
I can sort these based on ROI, and you can see Square is the biggest loser, down 59%.
Wow.
DocuSign is next. Palantir down 53%. Shopify down 52%.
Your big winner, 1%.
Yeah, the big winner was Luminar, which
That's
is in the EV autonomous
yeah.
vehicle space.
Very cool. Well, let's go back and look at ARKK, because I'm going to want to look at this at least once every other week. We've got Cathie Wood's 37%. We've got the date 2/18. We're going to find out. Again, as I said in my video 9 months ago, Cathie Wood's 5-year thesis might be right. But most of you investing in it don't have 5 years. And if the market turned inside her 5 years, you would sell. And that is happening right now. Again, I warned you 9 months ago that this was coming, and you could just Google search it or YouTube search it on my channel. It was very easy to see.
Yeah, it kind of goes back to, and I'm sure everybody's been to financial planner seminars where they, paint a rosy picture and just give your money to us.
Yeah, we'll take care of you.
Market. Yeah, which is fine. If you gave him your money down here in 2009.
Yeah, you look like a genius. Yeah.
Right. But if you gave it to him up here in the beginning of January, where we have more pain ahead.
Yeah.
Right. So it's about timing. It's not to say Cathie Wood is going to be wrong in 5 years.
No, but
can you hold through it? Are you willing to go
Yeah.
through this kind of pain?
Yeah.
Along with her.
And
wait
most
5
people
years.
aren't.
Right.
Most people won't. So this is very, very cool. Any closing thoughts on ARKK or Cathie Woods? I still love that $98 value with 33% calculator or whatever it was. That was
I mean,
that was pretty scary.
She unfortunately is experiencing the downside of higher rates, taking their toll on growth stocks, which is what her investment's all about.
Yep.
That's just a natural part of the market. That's just how the market works.
Well, the other
like
thing
I said on the last one, we're in a secular bull market, and we've got to go down a long, long way to break that.
Yeah.
But yes, it may come back, but do you want to live through the pain waiting for it to come back?
Most people won't. The other thing that Cathie Wood unfortunately is feeling is she had 2-year run where she was the top dog, which brought her a lot of money, which means she became the largest owner of stock in several of those 37 companies. And now as money is leaving, she has to sell them, and now she is the largest seller. So
yeah, that's a good point.
That is an unfortunate place to be. So I asked you to look at Carnival. What does it look like?
Let's see. Carnival is C. Trying to remember the symbol. And CRVL.
I have no idea.
Corval.
CCL? No.
CCL, that's it.
Yeah.
All right, so here's Carnival. Actually, not too bad. Starting to come back. So here, again, you know, I talked about this before, but I can pick things out of the chart very quickly. Just understanding it.
Yep.
So right now it's right below its 200-day moving average, but it looks like it's trying to break out. If it can get above that, that's a point where the algorithms are going to kick in. Right. So that could take it higher. Down here, this is the accumulation distribution line.
Yep.
This shows you what big institutions are doing. Are they accumulating or are they distributing? Right now it's above the moving average, so they are actually accumulating. So even though the stock has been down here, big institutions look like they're actually adding, buying it.
Okay.
And then the first two ones down here, the gray one and the blue one, this is Carnival versus the rest of the market. The rest 9,000 names in the market. And if it's above that pink line, that's the moving average, then it's outperforming the rest of the market. The next one down below that is how is it doing in its own industry? And again, it is outperforming the other names in its own industry. Those are two key things that you want to look at. And in both those cases, they look pretty positive. So Carnival actually looks pretty good as a you know, coming out of COVID play. Yeah,
that's why I asked you to look at it, just playing around. But this is a lot of fun. Dan, where can people find your newsletter one more time?
One other thing real quick,
sure,
which is interesting, is this is an ETF called Beds. This is a hotel ETF.
Oh, interesting. I never heard of this one.
Now it includes cruise lines.
Oh, it does. Okay.
The Carnival's in here too, as well as Hilton and Marriott, and this could be another one for coming out of COVID. But this is an ETF that, you know, allows you to participate in all of those different types of stocks that are in there.
Okay.
So that's interesting. And then the last thing I want to show as a different position.
Oh my God.
This is PayPal. So
yeah,
this one here, you can see here's the 200-day moving average way up here. Here's the 50-day way up here.
That doesn't
here's
look
the 21-day. Here's the 8-day. It's under all of them.
Yeah.
Look at the accumulation distribution line.
Not good.
It went below. It started to underperform way back here in October. This was the first signal. Actually, there was a signal even before then, but this is the confirming signal to get out of this stock. It dropped below the 200-day. It dropped below the 50. It dropped below all of its moving averages right there. And the big institutions were not only no longer accumulating it, they were selling it off.
Yeah,
they're distributing.
Looks like
they were distributing all the way down to that terrible earnings report that it had at the beginning of February.
Yeah.
So while this thing dropped like a rock after that earnings, and even on CNBC, the people on CNBC that had the stock looked like deer in the headlights.
Yeah.
They were like, yeah, and the moderator said, "Are you guys selling yet?" And they were like dumbfounded. Like,
I remember.
How do I answer that?
Yeah.
Well, they should have known way back here. If they had a technical analyst working for them, they should have known way back here that this was in big trouble, because the institutions were getting out. So why are they staying in? Right?
Yep.
And I had somebody, you know, a person that actually watches your channel ask me about PayPal. You know, what do you think? Is it going to come back? And I'm itching to get back in. Well, if you get back in now, that you are gambling. This is the definition of gambling.
Yeah. You're trying to pick a bottom and it's hard to do.
You're trying to pick a bottom and you might be right.
Yeah. Definition of a falling knife right here, folks.
That's right. The
Yeah.
falling knife. But I wouldn't want to get in front of this freight train. And you can see how it's doing against the rest of the market, this gray area.
Not good.
So it started to underperform the rest of the market way back here in July, way back here when it first started to go down, right? And it first started to underperform its own industry also back in July, the same time. Those are two clear signals in addition to the accumulation distribution line that you do not want to be in this name. Now, will it come back? Yeah, of course, it'll come back eventually.
Sometime.
But you look at the accumulation distribution, not only are the institutions distributing, meaning
accelerating,
but it's accelerating.
That's what I saw. That was the first thing that caught my eye after 6 weeks of doing with you. Right there. That was scary to me. Yeah.
So you're starting to learn French.
Yeah, it's fun. It's fun. Well, Dan, do me one favor. Show them one more time your email to get on your mailing list. breakpointtrading@gmail.com. Dan, thank you very much for your time.
You bet. My pleasure.